So 18 months ago, you laid out your vision for BP. A year ago, you gave more specific targets. If you had a scale of 1 to 10, 10 being you're at your goal, where do you feel like BP is right now?
I feel really good, Alix, about where we're at. And it's great to see you. And thanks for including me. I feel really good. I think it's been a difficult year for the world, for society, for our employees, for shareholders. And the pandemic has obviously been overriding everything. But we've done a lot in the last 18 months. And I was just looking back at a few of the things this morning. But our strategy at its core speaks to performing while transforming. It's about delivering for our shareholders today while preparing BP for tomorrow. And I think on that front, we've done pretty well. I think our first quarter results were, I think everybody would say, a strong set of results and show that the business is really performing, bringing on new projects, taking cost out of the system, doing the things that a well-run business does. And at the same time, I think over the past 18 months, we've made some real steps into the future as we prepare and indeed transition BP for tomorrow. So feeling pretty good as we sit here today, Alix.
So scale from 1 to 10, 10 being you did everything, it's perfect. Where do you feel like you're at?
Well, it's a big company, of course, in many, many parts of the world. So there are always issues, but I'm certainly up there at an 8 or a 9.
Oh, 8 or 9. Okay. Now, talk about the performing while transforming, and in terms of where you think that shareholders are, because I'm sure the conversation with your shareholders has evolved very much in the last 18 months. Here in the US, a lot of oil companies like Exxon are getting a lot of activist investor shareholder pressure. So when you deal with shareholders, where are they on a scale from 1 to 10?
Well, I think, look, we have to put ourselves in our shareholders' shoes. And what we announced last year, particularly with our strategy update in August and September, was a real strategic pivot for the company. And I think the real question on shareholders' minds was whether this needed to be a choice. Was this a company that could transition for the future, but maybe have to compromise on delivery for today? And I think that's what investors were trying to get their head around as we approached the end of last year. And that's why I think as we headed into this year, the story has taken some time to sink in. I think people now understand it a lot better. You may have seen Barclays' recent report that raised us to their top pick in the sector and said that we were the most undervalued and we had the most upside. And I think it was those first quarter results that showed that this was a business that had the potential to generate real cash. And we delivered that net debt of 33 billion, less than 35 over a year early. The cost is coming out of the system, 2.5 billion by the middle of this year, 3 to 4 billion per annum by 2023. We're bringing on new projects. They're going well. So all of the things that a well-run business needed to do. And I think investors like that. And they like the fact that through our ambition that we launched with you, in fact, last year, we're ahead of the game, a net zero ambition, a 50% reduction in carbon intensity, and importantly, a 40% reduction in production. So are we preparing BP for tomorrow? I think few people will question our resolve to do that. And at the same time, importantly, we have to deliver on the investor promise today, which is to deliver cash returns to our investors. And that's what we're doing.
So if BP is at an 8 or 9, are your shareholders at 8 or 9?
I think our shareholders are much more comfortable with the strategy and the story and much more supportive of it today than they would have been several months ago. I think that's on the back of strong operating performance. That is the core. And at the same time, I think they're seeing us take decisions as we invest into the future that are disciplined, that are strategically coherent, and that set the company up well for the long run. This isn't a light switch. This is not a flip overnight. This is a transition. And I think that the investors are seeing, Alix, more and more that this doesn't have to be a choice, that they can get a resilient dividend today. They can get upside through share buybacks. And if the oil prices stay strong, these will be material share buybacks. This is a company that is going to grow 7 to 9% per share in EBITDA terms over the next 5 years. And it can be part of a sustainable transition. So the proposition is becoming clearer and clearer to investors. And I think they are beginning to feel much more comfortable about the story and the strategy.
I'll put them in at 8 then. Feels like that's an 8. More room for
We
improvement,
will go
but
with
an 8.
that. We will go with that.
Okay. I mentioned Exxon and Engine One, an activist investor in pressure, but it's not just with Exxon. Shell also lost a court ruling that sort of is pushing them to move faster to speed things up. If someone came to you and said, Bernard, you got to move BP faster than you thought, can you do that?
Well, let me just say a couple of things on that, Alix. And, I think I can say this openly. I think few people doubt that we are doing everything that we can to transition this company. Last year, we took the very difficult decision to cut our dividend in half so that we can transition. We wrote off $20 billion worth of assets, which we felt neither should be produced or could be produced. They were written off, a very difficult decision so that we can transition. We restructured the company in the biggest restructuring in 110 years so that we can transition. And we announced a plan to cut our oil and gas production by 40% over the next decade so that we can transition. So I think it would be very difficult, to ask more of a company of our size and scale. So I think the commitment is there. I think the evidence is there. And Alix, as I look back when I spoke with you in London almost 18 months ago, just before the pandemic, look at what we have done in the new world since then. We had 0 gigawatts of offshore wind then. Today we have 3.7. We had a renewable pipeline that was 4 gigawatts. Today it's 23 gigawatts. We had 7,000 charging points. Today we have 10,000 charging points. Our net debt, by the way, at the end of that first quarter was 51 billion. Today it's 33 billion. So when I look at it on those dimensions, of course, there are people who will say that you should do more, but I think there are a lot of people who would say that's an ambitious plan, that's ambitious delivery, keep going, stay disciplined, stay focused on performance, and keep preparing this company for tomorrow. So that's what I would say in response to that question.
Along the same lines, I'm wondering, because you've had 18 months, and no doubt you took over in this transition as CEO in an extraordinarily tough time, is there one thing that you felt that you could have done better, that there was some sort of transition or some sort of thing that you did that you're like, I wish I could have done that instead. I wish I could have done that better. And then conversely, one thing that you're super, super proud of that you felt was ambitious and that you got it and you nailed it.
I think, I think the things that I would speak to, Alix, are around, quite frankly and quite openly, our people. We have 70,000 people working in over 70 countries around the world. I come from an upstream background, so intimately familiar with the people who went offshore to our facilities and kept the oil flowing, the people obviously that worked in our refineries, that kept the fuel and the gasoline flowing. And when I moved to my new job, meeting the people in our retail sites across the world who are right at the front line, sharp edge, dealing with customers each and every day. And I think, so what am I most proud of? I'm actually most proud of what they have done to keep the energy flowing in the world. It's extraordinary that even in a year when the entire world seemed to grind to a halt, energy use was only down by about 4%. So that's the thing that I'm most proud of, those people. And the thing that I wish I could have done more of would have been to help those folks, because some of the stories are incredible. I've just heard one gentleman come back from Angola to his family in the UK. He's been away 5.5 months from his family because of all the quarantines and the rotas that we're doing. And he's going into a quarantine hotel for 2 weeks in the UK. We have our people on our ships around the world who've had extraordinary problems trying to crew change, and some of them being away for 6 or 9 months. And you just wish that with everything that everyone has going on, that you could have helped them more. But from a strategic perspective, there are always things that you would do different. But I would have to say that on balance, I feel good about where we're at in a strategic sense. It's now about a relentless focus on performance and execution and cash delivery and delivering on that shareholder proposition, while at the same time, while at the same time preparing the company for the future.
It was a very good answer. When you talk about buying assets for wind, and you mentioned sort of the huge steps that you guys have made in the last 18 months, one pushback is that you guys are overpaying for assets. What's your response to that?
My response is simple. We're not overpaying for assets. It's as simple as that. We have a very clear return threshold. We've been very clear that we will not reach our targets if we cannot meet that return threshold of 8 to 10%. We walk away from far more projects than we do. And when we do them in a disciplined way. People talk about the projects here in the Irish Sea. Alix, there are probably 6 or 7 companies that want to buy into that project today, and they would pay a premium to enter that project. People say, well, you're an oil and gas company that's behind or late to the party, or whatever language they wish to use, and therefore you overpaid. And of course, the answer to that is, well, in that particular instance, we're not BP on our own. We have a partner called EnBW, who's a German utility with extensive experience in offshore wind. So it's not like we're doing these things on our own. So we're confident in what we are doing. We have a very clear financial framework. We have very clear financial objectives, and we are very clear that if we cannot meet those objectives, we won't do the projects. And as I said, we walk away from far more than we do. I would add, by the way, Alix, that in solar, Lightsource BP has done 31 projects now, all of which have met our return threshold. So this isn't something about the future. This is about a track record that exists today as well.
So this is sort of the opposite of that question. Boston Consulting Group a few weeks ago had a report out that said the oil majors are going to spend more on low carbon investments this year than traditional oil and gas. It's like the first time that flip would have happened. For BP, is there going to be a point where that flip happens for you, where you're going to spend more money on those low carbon investments than you do with oil and gas? It's $5 billion. It's $5 billion by 2030. When does it shift?
Yeah, by the end of this decade, Alix, I think you'll see that start to shift. We're going to increase our investment in the transition by about 10-fold over the next 5 years, or by the next 10 years, 8-fold over the next 5 years. So this is a material step up in investment. We have to continue to invest in that hydrocarbon base because it is core to our strategy. And without those hydrocarbons, we don't get to transition. So the hydrocarbons provide the cash flow that is necessary to make sure that our investors get the return that they deserve. They've been patient, and it is time for them to get the return that they deserve. Make sure that we have a strong balance sheet and that we can invest into the transition. So this will evolve over time. It's not an overnight switch that some people would wish it were. This is a complex transition, but it's one that I think our plan is hopefully very, very clear on, and that will play out over the coming years.
Do you think that oil majors like yourself that are making these tough calls on where to invest money, are you guys setting the oil market up for a super cycle? Or do you think you can stay flexible enough to prevent that from happening while also spending a lot of capital and time into other types of investments?
Well, look, I think a lot of people are talking about our commitment to reduce our production by 40% by 2030. That's about 20% by 2025. Even by reducing our volume by 20% by 2025, we will still grow our earnings and our cash flow from that business through that period. Why? Because we don't want to run the biggest oil business. We want to run the best oil and gas business. And as you well know, that means that you focus relentlessly on your portfolio, focusing on value, not volume. We focus religiously on margin. Our margins will go up 20% on a unit basis over the next 5 years. So this is a strategy of focusing on value creation. And that means we don't worry about volume, we focus on value. So I think there's a good chance that oil prices will be robust and high over the coming years, Alix. I think there's a good possibility that they will be volatile. We're not planning on them being high. We're building a company that's resilient to a low price, but I can tell you, and I can assure you that if they are high, we have a portfolio that will absolutely benefit from that. And because we have the share buyback program that we have that says that 60% of excess free cash is used for buyback purposes, that could result in material share buybacks over the coming years if prices remain at the levels that they are today.
If you needed to, though, Could you pick up the pace and produce more oil and gas if the world needed it to prevent some kind of super cycle, or is the discipline just going to be the discipline?
The discipline is going to be the discipline, in your words. We would do this 40% with or without an energy transition. This, we believe, is the right way to run a hydrocarbon portfolio. Focus on value, focus on margin, take costs out of the business, digitize everything that we can. I've just come out of a meeting on digital. I've just come out of a meeting on agile. We have what we think is the largest organization working in an agile way in the energy sector, 7,000 people now working in a structured agile way, decisions being made 30 to 40% quicker. That's what running a good oil and gas business is about for us. And that means that we can actually grow cash flow from that business over the coming years, even as we shrink volume.
Talk to me about carbon offsets. I know that they're an important part of the energy transition because they're just some industries that just can't green quickly. What's the role? But then the criticism for carbon offsets is you're just going to plant a lot of trees, and that's really not going to do it. Can you talk to me about how BP thinks about that?
Well, the first thing is that we're going to reduce our emissions, scope 1 and 2 emissions, by between 30 and 40% within the next decade. We're also going to reduce the emissions from the carbon content of the oil and gas production that we produced, you'll remember this fact, by also about 30 to 40% over the next decade. Importantly, we do not rely on carbon offsets to achieve that level of emissions reduction. Now, with that said, we do believe that carbon offsets are an important tool in the toolkit to help the world get to net zero. This is a complicated, challenging problem. And Alix, we're going to need all the tools that we can throw at it: solar, wind, hydrogen, CCS, and indeed carbon offsets, or what people call natural climate solutions. BP is very active in the trading space around this. When it's done properly, it can be an important market signal to industries and allows them to actually bear the cost of that externality, but do it in a way that is efficient. It also, as you say, has extraneous benefits around biodiversity if it's done properly. So I think the key for me is twofold in natural climate solutions. Number one, we do not rely on them for our own emissions plans over the next decade. Number two, we will be active in that space. In a trading sense, we need a proper, effective market, and we must make sure that quality is at the core of that, because that is the most important thing. And when I talk about quality, I talk about really being invested in reforestation or preventing something that was going to be cut down from being cut down, and also how it relates to the community where that works, and how we make sure that those farmers are fairly compensated. We just bought a company in California, actually, and its role in life, it's called Finite Carbon. Its role in life is that any farmer anywhere in the world can plant a single tree and get paid for it. And it does this through a satellite system where it has the resolution to be able to pinpoint a tree, pinpoint the quality of the work, and make sure that that farmer gets appropriately compensated. So that's the type of thing that can help, but it's got to have quality at its core.
Yeah, and that speaks to the broader sustainability point, which leads me to, when you sell an asset, what's the thought process? Because some might say it's better for you guys to keep an asset that then you can green better. But if you're just selling it, maybe the person who buys it isn't going to do it as well, and it's going to get a little bit dirtier and not greener. How do you make that more sustainable?
Well, look, Alix, I think the first thing that I would say is that we don't own the resources in the majority of the countries that we work in. So some people say, well, just put the resource to one side, put it in a bad bank or whatever, and let it decline. Well, they're not ours to do that with. We do not own the resource. They are the resources of countries, and only countries can decide how best to develop their resources in their own economic interests. So that's one point I would make. The second point I would make is that divestments isn't the only route to our 40% reduction in production. We are exploring less. In fact, we said we will no longer enter new basins to explore for hydrocarbons. We've taken our capital budget way down. It used to be almost $20 billion a year in hydrocarbons. Today, it's between $7 and $9 billion in hydrocarbons. So we're not just selling, we're also doing it very, very differently. Divestments have been part of our strategy for as long as I've been in the company. So there's nothing new here. Of course, we take that money from divestments and we invest it into the transition. So I would argue that's a net positive for the world. But finally, Alix, I would say the following. I have a responsibility clearly to society and to the world to do what I can do to help in a small way, help the world get to net zero. And that's what we are trying to do. I also have a responsibility to the shareholders of BP, to the owners of BP, to grow the value of BP. And one of the ways to do that is to de-risk it as an investment proposition. And one of the ways to de-risk it is to decarbonize it. So I hold those two obligations side by side, and divestments helps me particularly on that obligation to the owners of BP, if that makes sense.
It does. The tricky part in all of that is Rosneft. What kind of conversation are you guys having about eventually having to sell it?
Rosneft is, so the first thing I would say is resilient hydrocarbons are absolutely core to the BP strategy. It's one of our three pillars: growing convenience and mobility, investing in low carbon electricity and energy, and resilient hydrocarbons. In fact, those resilient hydrocarbons are the engine of the transition. Rosneft is the epitome of resilient hydrocarbons, both from a cost perspective and from an environmental perspective. Now, why do I say that? Well, first of all, its lifting costs are less than $3 a barrel. In BP today, they're between 6 and 7. So they're very resilient from a cost perspective. And from an environmental perspective, their greenhouse gas intensity per barrel of oil produced is better than BP. In fact, it's better than many of the international oil companies. And of course, they have tremendous scale. And by the way, I would argue they care deeply about this subject. They've just released a new 2035 plan where they're going to make that greenhouse gas intensity even better by between 20 and 30%. They've driven their fugitive emissions down by 70 or 80% in 2019. They've set a methane intensity target of 0.25, which is very strong in industry. So Rosneft cares deeply about its environmental performance, and so do the Russian people. The Russian people care as much about their environment and their lakes and their forests, from my own experience of having been there, than we in the US and the UK care about our local environment. And when something's a priority in that company, it gets done. And I've seen fantastic progress. We can learn as much from Rosneft in this subject as they can from us, but clearly we work these issues together.
Does that mean that you would never sell it?
Rosneft is an absolute core part of our company and our strategy.
Okay, that's pretty clear. As we just finish up, I wanted to get your take on Scope 3, the emissions from your products. That is a big debate in the industry. If people commit to Scope 3, analysts say, yeah, that's not going to happen. No one can actually do that. But it is definitely the elephant in the room. How do you think about starting to tackle that down the road?
Well, we have a carbon intensity target on Scope 3 emissions. We said that we'll reduce the carbon intensity of those emissions by 50% by 2050. So that's number one. Number two, I think it's very important that we have said that the carbon content associated with the oil and gas that we literally add to the world through our drilling and production around the world, we're going to take that down by 30 to 40% over the next decade, which I think is absolutely material. But look, Scope 3 emissions are absolutely important. We have to work with government, because it's government who creates policy. We have to work with our customers to help them. And we have to, Alix, instead of saying it's all on our customers or it's all on government, which it is partly, we have to be the ones who are saying, look, this is a really challenging problem. Back to that statistic, imagine that in a world where it felt like the world ground to a halt, energy use only fell by 4%. So this is a very complex problem to solve. But our role in BP isn't to tell society how hard this is. Our role is to help society give them what they want. And that's what an integrated energy company can do. That's our strategy. It's to help people get the energy that they want, that is clean, reliable, and affordable. That's what a hospital needs. That's what a data center needs. And our job is to try and help solve that problem with our customers and with government, because without policy and without our customers, we won't be able to do it. But without us on the production side, it has to be us working together. And that is what I think is what leadership is about.
Well, Bernard, you've done so much in 18 months. And I look forward to the next 18 months for you guys. Thank you so much for your time. I very much appreciate it. Thank you for joining me.